Topping this week's cattle industry news, NCBA is continuing its fight against the death tax. In fact, a permanent repeal of the tax is NCBA's top policy priority for 2012. At the end of this year, the extension of the Bush tax cut is set to expire, and without action by Congress, the estate tax, better known as the death tax, will revert to pre-2002 levels. Scott George, a Wyoming dairy and cattle producer who is currently serving as the president-elect of the National Cattlemen's Beef Association, says this punishing tax poses a real threat to the future of all family farms and ranches.
Our biggest issue, quite honestly, is the death tax. At the end of this year, right now there's an exemption of $5 million of assets that exempt, and after that, above the $5 million is a 35% tax rate. At the end of this year, that is set to expire and revert back to $1 million worth of assets, and then everything over that will be taxed at 55%. It doesn't take much anymore for an ag operation to have land and equipment and livestock that will be equivalent to $1 million. Most of us are asset rich and cash poor. But if a person passes away and their families then forced to sell half of their operation to pay the taxes, it will make many of those operations unable to sustain themselves and remain in business. And so that is our number one issue.
You can make your voice heard on the death tax by joining your fellow cattlemen and women as a member of the National Cattlemen's Beef Association. Joining is easy. Give us a call at 1-866-USA-BEEF or visit us online at beefusa.org.